All right, everyone. Hello, welcome, welcome. We're gonna give everybody about 60 seconds to chime in. But thank you guys for joining. Feel free to introduce yourself and utilize every moment as an opportunity to network, introduce your business, and what you do, and the services or that you offer. We'd love to get to know who you are, who's in the room. Um, So I'm gonna go ahead and get started. I do believe we'll be recording this session, so you guys don't miss anything. I suggest you take out some notes because we got some great information from one of our amazing partners at First Founders First Capital Partners, Mr. LeJean Thompson. He'll be able to tell you who he is, where he's from, what part of the region that he's servicing, and exactly what these amazing folks are doing at Founders First. So again, thank you guys that took the time out of your business to work on your business today, which is very commendable about from our entrepreneurs. We always want to congratulate you on taking time to pour into your business. If you haven't had the opportunity to connect with me, my name is Aaliyah Bunch. I'm the Director of Stakeholder Services here at EMSDC. So I love to learn more about what you guys are doing, what's your council goals, and how we could support them. So make sure that you're not a stranger. We also have Meg on the call. Meg is here to make sure that you guys have access to all the opportunities and information that we're sharing. I can't say this enough. Please follow us on social media and making sure that you're keeping up with with your emails because I don't want you guys to miss any money. Don't leave any money on the table.
Right.
Um, and just to let you guys know some exciting things that's coming up real quick before I go. We will be in New York, New Jersey, supporting our regional council at their upcoming conference, the Business Opportunity Exchange. I don't want you guys to leave any money on the table in New York, New Jersey, as some of our partners over there are looking to meet with vendors from our region. So make sure that you check out the BOE, Business Opportunity Exchange with New York, New Jersey. We also have an in-person, is actually a webinar going on, how to respond to your RFP with the University of Penn. I know Meg shared that on our website. Please check it out. I get a lot of people that just need that little hand holding to respond to opportunities. You want to beat that bid and want to be the best qualified candidate. You need to take advantage of some of that information offered by Mr. Malcolm Ali, a Mr. Purchase Officer. He also has an in person event tomorrow and a virtual event today. So check out our website so you guys can get that information. A lot of exciting things coming up with the World Trade Center, making sure you guys know how to expand your business opportunities as well as local folks as the city of Philadelphia. So check out our website, stay on our mailing list, and stay tuned for Mr. Lejean's information. Now, few housekeeping. If you have any questions, please use the chat Q&A. Once we're done with the presentation, we will make sure that we get to all of the questions. And then another thing, we will be providing a follow-up survey. Please let us know how we can help you, how more information you want us to bring to you next quarter. So without further ado, Mr. Thompson, let them know why you're here, what you're doing here, and we're super excited for you to share the information. Enjoy, guys.
Absolutely. 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 First, let me just say to you, Aaliyah, and to you, Mac, thank you so much for allowing us to continue to advance this partnership, this collaboration. It's really important that, we have this ecosystem that is fully available to all of our deserving founders. And, we're removing the barriers so they can really take full access of, everything that's available to them to help them grow and scale their business and to do so, expeditiously. So, let me pull up my website and my presentation. And guys, let me give a disclaimer in advance. I do apologize. I am severely suffering with sinus congestion this morning, this afternoon, and so please forgive me if I sound a little nasally. Listen, discharge it to the season that we're in right now. But we're going to get through this. It's going to be very entertaining. It's going to be very informative. And by the time we're done with this presentation, for any founder that is actively seeking capital so you can grow and scale your business, I want to make sure that we absolutely connect and walk you through the process of how we can potentially be your long-term capital partner. Okay. So with that being said, let me pull up my presentation. And if you guys don't have any issues visually, if you can see, If there's any challenges, it should be at full screen. All right. We're just going to jump right into this. Okay. So I am LaJon Thompson. I've just been elevated to a senior management role within Founders First Capital Partners. So I am now a senior regional development manager for Founders First for the East Coast Division. Founders First, we are headquartered in San Diego, California. We've been around since 2015, and that we specialize in making sure that we provide capital access to founders who have traditionally had those challenges of getting connected to the resources that they need to grow and scale their business. Okay, so what we're going to talk about this hour, from this 45 minutes, we're going to talk about really how do we unlock friendly, founder friendly growth capital. Okay, so I'm going to share with you how we, Founders First Capital Partners, how we help service-based B2B businesses scale without giving up ownership or control. Okay, so we're going to cover a lot. We're going to cover a lot in a very short period of time. We're going to talk about the traditional funding, how traditional funding falls short, right? We're going to talk about the conundrum with banks, VCs, MCA, etc. All right. I'm going to share with you the Founders First approach. Our capital is non-dilutive. It's founder friendly. It's growth capital. Okay. It's designed to help you grow and scale your business. All right. We're going to talk about, how does our capital work? Okay. We're going to talk about, what we look for in regards to companies that we would like to add to our portfolio. I'll walk you through what that journey, what that process looks like, and really, what can you expect? Right. When you partner with the, Founders First Capital Partners, what does that look like? What does success look like? What are the real outcomes to the founders? Okay. And then we're going to pause at the end of this for a live Q&A session as well. Okay. So this is an opportunity for us to really get familiar, okay, with each other. I would love to learn more about you, your business, your capital needs. Okay. So please, any questions you have in regards to who we are, what we do, who we fund, and how we fund, please, raise your hand. I would love to have that conversation with you at the conclusion of this presentation. All right. So let's talk it. Let's jump right in. Let's talk about what is the founder reality, right? When we talk about growth is working, but the capital is broken, right? So we're going to talk about the different conundrums, and I'll do a deeper dive in the upcoming slides. But your revenue is growing, but your cash flow is unpredictable, right? Every founder wants that predictable recurring revenue model because again, it just it really positively impacts your monthly net cash flow positively, right? So we're going to talk about how some of our lending solutions can really mitigate and remove some of those cash flow constraints so that you'll have more more capital to ideate with and to leverage in order to grow and scale. Okay. We know banks are going to say no unless you hit you meet their credit box. And we'll talk a little bit about that. We know equity investors. Listen, we all romanticize Shark Tank, but listen, equity investing is not for the weak. Okay. And again, it's all about ownership and control. And we know that equity investors, they're looking for that next unicorn, right? So we're going to do a deeper dive into that as well. But more importantly, we're going to talk about we're starting to see that a lot of our portfolio companies, they seek us out because they have this extractive debt that's on their table, right? And there's three letters that we all dread, MCA. So we're going to talk about that as well. Okay. All right. So we know that banks, they're going to prioritize stability. Okay. Traditional banks are designed really for that established business. These companies are companies that they're exceptional financial historical financials. These banks in order to really be attractive to them, they want to see that you have significant collateral to collateralize any loan size, right? Because they need that guarantee. And a lot of our companies, the middle market companies just aren't bankable yet, right? So we're going to focus on that we're often, the middle market companies are often overlooked, right? So we want to make sure that, those profitable, growing service-based businesses, that really need that flexible cash that is really aligned to their business model. They get access to that capital where they're not giving up equity and ownership of the business. They're not collateralizing the opportunity. And again, when you talk about MCA, right? I've seen literally opportunities where people were paying 200% in interest. That's usury, right? That's severe, that's excessive, right? That should be punitive. But we know that there's a lot of founders that seek MCA because they're in a cash crunch, right? And they're looking for something to really help mitigate those challenges. And so they're getting stuck into that I call it a black hole, MCA. And all it really does is create dependency. So we're going to talk more about how is Founders First a solution to those that are dealing with that extractive MCA debt currently. Okay. So as I just shared with you, there's a conundrum, right? There's various sources of capital that you can seek as a founder. Okay. One of the things that really differentiates us in this space is that we're just not deploying capital. Okay. We're actually looking at this. Our capital our approach is this is a shared success model. As your company is hitting certain demonstrable milestones and metrics and you're growing and you're scaling, we want to be there right alongside with you as your primary go-to capital partner. And listen, even if you're looking at different, various capital stack, right? The stacks, we can play a role in any capital stack. And I'll share more of that with you as well. But you see what you have, your banks, they're going to require the collateral, MCA, very fast, very costly. Okay. Angels they can't really provide the capital to help you grow and scale. Okay. Then you have VCs. VCs, again, they're looking for that unicorn. They're looking for that sizable exit. And again, you're going to leverage ownership and control going that route. Okay. So let's talk about where Founders First fits. Okay. We fund the overlooked middle. All right. So we're beyond the bank. We're before venture capital, and it's really built for cash flow realities. Okay. I'm going to share with you our three lending solutions, but I'll start introducing one, our revenue-based model. It's our revenue-based financing product. It really flexes your business cycles. Okay, so it's not rigid, right? It's not tied to it's not fixed. It's not tied to a fixed rate, right? So as your cash flow, your net cash flow on a monthly basis is fluctuating. Okay, we have a lending solution that is designed to help you optimize your cash flow on a monthly basis. So, for example, if you're having a slow month in revenue, you're going to pay a lower amount for that particular month for in repayment of a facility. Okay, I'll do a deeper dive into revenue-based financing as well as our two other lending solutions. But this is where we fit in, right? When the bank says no, and you're too soon, too early for venture capital, we are that alternative flex capital that is really designed to help you grow and scale. Okay, so let me share with you who we are. Okay. So a little bit about Founders First, what we do. So Founder First advance, we advance the inclusive economy. We like to believe that we're looking at this from a perspective that this is about really connecting the resources to the underserved, underrepresented entrepreneur who historically has been left out of the conversations around getting access to capital. Okay. So we advance inclusive economies by delivering non-dilutive flexible growth capital. And it's really, germane to helping you grow and scale without giving up ownership and control. Okay. How do we do this? We provide lending solutions. One example is revenue-based financing, and I'll share with you our other two products. And this is we call it patient capital solutions. All right. It's what we call a shared success capital model. It's really designed to align with the business performance while offering the flexibility of equity without dilution. Okay, it's very important. All right. We do this, we pair it with advisory support, and this really helps founders scale sustainably into the mid-market. All right. Why do we do this? Okay. While others are looking for the unicorn, we're investing in the singles, the doubles, the triples. Okay. These are the real drivers of our economy. Okay. Helping businesses not just survive, but thrive. Okay. By doing so, we can enable quality job creation, wealth building. And this is, we've contributed over $32 million in new wealth creation for founders and their families. Okay. That's significant impact. Okay, who do we serve? We do the underinvested, service-based, tech-adjacent B2B companies that are generating between $500,000 to $10 million in revenue. And again, this is with a clear potential to scale. We want to get you to the mid-market positioning. So we want to take your revenues north, get you up to $10 million to $50 million in annual revenue. Okay, so that's just a little bit about us. Now, let's do a deeper dive into who we serve. Okay. So growth stage service-based businesses. Okay. These are B2B companies with recurring or contract-based revenue. Their revenue size, historically and traditionally, our sweet spot is 500K to $10 million. Do we have clients in our portfolio that are north of $10 million in annual revenue? Absolutely. And I have a success story that I would like to share with you towards the end of this presentation to really shed light on that. Okay. We're looking, we focus on companies that are asset light. Okay. Operations driven models. Okay. And this is really, this is really designed for what are you building? What's next, right? So we want to make sure if you're not profitable, you're on a pathway to profitability. Okay, you're experiencing growth, but there may be some constraint, some capital constraints, right? We want to clear the path to scaling you up to $10 million to $50 million, that mid-market sweet spot with our capital. Okay, and we have several success stories where, with our capital being leveraged and optimized correctly, we have taken companies that are now in that mid-market space. Okay. So let's really talk about who we are not. Okay. We're not merchant cash advance. Okay. We're not coming in. We don't want to take any equity or ownership of your business. We don't want a board seat. Okay. So that's not who we are. We're not asking for any collateral. Okay. All of our lending solutions do not require any collateral. Okay. That's a huge differentiator for us in this space. All right. We're not doing daily or weekly pulls. Okay. Our loans are amortized. Okay. It can be anywhere from 2 years up to 4 years. Okay. As far as we're not in the business, we're not into, real estate owned, we're not into property. We're not into, uh, going after assets and causing a liquidation. That's not who we are. Okay. And that's one of the reasons why we're very methodic in our approach and how we even engage founders to assess if not only are we the right fit for you, but are you the right fit for us? Okay. We have a very, very good impairment rate with our portfolio. And that's because we do a lot of the vetting on the front end. Okay. A lot of funding opportunities, you may be 60 days into a conversation and you think you're almost close to the finish line, just for someone in underwriting to say, hey, Mr. Thompson, unfortunately, we're going to say it's not a no, but not right now situation. Okay. We do all of our vetting and all of our fit sizing on the front end to make sure that you're the right fit for us and we're the right fit for you. Okay. Now, let's look at some comparisons because this is very important. I want you to see exactly what differentiates us in this space. Okay, so let's start with banks, and we'll talk about VC, MCA, and then where we're at right here, founders first. Okay, so we know if the headline rate is going to be the attraction, is going to draw you to the capital. You can get a cheaper rate going to a bank. But here's the thing. As far as speed, it's going to be slow. Okay. They want collateral. And again, it has to be sizable, significant collateral. Okay. And it has to be a mature business. Okay. If you're, unfortunately, the majority of the businesses that engage us, they're just not bank ready. Okay. And that's okay. That's why we're here. We're the solution and the answer in the marketplace for that dynamic. Okay. VC, we all know venture capital is it's very attractive. We think that we're looking to be the next Facebook, the next Uber, et cetera. Okay, but you're leveraging ownership and you're leveraging management of something that's near and dear to you. Okay, something that you created, that you're building. Okay, and we know that at least if your multiples don't look attractive, VC won't even touch you, right? We all know that. Okay, MCA. This has been I like to call it an epidemic, unfortunately, and I think that it's very irresponsible to really steer a product that's going to have you paying 40, 50, 60% interest on a dollar. So MCA, yes, it's fast. And listen, this is not, I'm not being judgmental. Okay, the majority of my clients that come to me, they have MCA debt on their table. And we want to come and get that debt off your table. Okay. We want to remove those cash flow constraints. We want to consolidate that so that you'll have some room to breathe and that you can start to ideate and have some capital to really shoot, hit those targets, in regards to your growth strategies. Okay. Um, I want to really pause here and really highlight, what makes us stand out in this capital landscape. Okay. So we're incredibly fast. Okay. We're very agile. We're not as protracted as any of the competitive landscape. We, from start of conversation to funds deployment, we've been able to do this within a 30 to 45-day window. Okay. We move as fast as you move as the founder, and I have some very, very success stories around founders who really get that. Okay, they move expeditiously. They're highly engaged. They want to make, they have line of sight to closing, so they're being very responsive to any requests or any documents that we may need. And again, I have a very, very good success story that I would like to share at the end of this as well. Okay, our cash is flexible and it's cash flow aligned. Okay. It's designed to remove those cash flow constraints. It's designed to help you grow and scale. Okay. Our capital is not really designed for, operating capital. You can leverage it for operating, to scale up operations, but it's not really designed for operating, right? It's really designed to help you grow and scale. All right. It's performance based. As I shared with you, our model is a shared success model. Okay. As your company's growing, as you're scaling, we want to be right there with you as your preferred capital partner. Okay. The average lifetime value with our clients is between 3 to 5 years. Okay. Overwhelming majority of our portfolio companies, they come back to us for follow-on funding because we can take them up to $2 million in growth capital. Okay. So that speaks to us being more relational and not transactional. It's just not about capital deployment. This is really about, we want to make sure that, as you hit those milestones, we're right there with you. Okay. Fully retained. Okay. We're not coming in. Our capital is non-dilutive. I can't drive that home enough. You're not giving up any equity, any ownership in your business whatsoever. Okay. It's really designed to help scale those service-based businesses that historically have been, let's just call it what it is, have been left out of the conversation in regards to getting access to capital they need to grow and scale. Okay. So let's talk about how our capital works. This is very important. It's really built around how your business actually generates revenue. Okay. We fund based on real business performance, not rigid formulas. Okay. Our payments adjust with your revenue. So you're not overextended. Okay, in your slower months. There are some businesses where revenue is cyclical, or it's there's some seasonality to your revenue. So our revenue is really designed where your repayment to the facility adjusts as your revenue adjusts as well. Okay. There's no daily, there's no weekly withdrawals. Okay. Our products are amortized on a monthly basis. Okay. There's no equity. Again, our capital is non-dilutive. You retain full ownership and control. And again, it's designed to support growth, not restricted. Okay. So let's talk a little bit about our three products. So we have our flagship product is it's called a revenue-based financing loan. And this is designed for companies that have that recurring predictable revenue model. And it really flexes on the monthly net cash receipts of the business. So let's say you have a bit, your business is 80, 90, 100% recurring. You're profitable. You're eligible for the revenue financing product. But let's say that you have some months where your revenue is light. Okay, your revenue is slow. So your payment for that particular month is going to be tied to your monthly net cash receipts. So if you have a slow month in revenue, you're going to pay a lower amount for that facility repayment for that particular month. Okay. It's RBF, revenue-based financing, again, designed for those companies that have that recurring predictable revenue model baked into their revenue. We have our term loan. A term loan operates just like any term loan. It is a fixed payment structure with predictable long-term capital needs. Okay. And then we created a hybrid loan, which is a combination of our RBF and our term loan. Okay. This really customizes and blends the flex terms and revenue-based flexibility into one product that really gives you, I like to call the best of both worlds. Okay. So we're not a one-size-fits-all shop. We're going to look at each individual opportunity, each individual credit on its individual merits, and we're going to design a facility that is the best fit for that for your business, because it's really designed. Listen, we're removing burden. We're removing obstacles. We don't want to be an additional burden for you. Right. So we want to make sure that our capital, while it's flexible, we're also being responsible. Again, we don't want you to take on capital that you don't have the capacity, to repay. Okay. So we're going to make sure that when we look at your ability to take on a sizable debt, your debt service coverage ratio, we're going to make sure that you have the ability to repay without any hiccups, because again, this is designed to help you grow and scale, and it's not designed to be restrictive. Okay. So I want to give you just an example. And again, this is just an example of how our revenue-based financing works. Okay. Now, with all of our lending products, we potentially can take our founders up to $2 million in growth capital. Okay. We historically look at the trailing 12 months top line revenue to determine what is the, size and, the size of a particular facility. And our sweet spot is usually around 30% of the top line revenue for the trailing 12 months. Okay. We're looking at your revenue run rate. All right. So with our revenue-based financing, again, this is just an example. So let's say we have a company, they're doing $1 million in revenue. They're looking for a $200,000 loan. And once we go through the underwriting process, we say, okay, we're going to come out and offer an RBF, and we're going to do it for 3 years. And with revenue-based financing, which is different than a term loan, you're looking at a royalty payment. Okay. The royalty payment in this example could be anywhere between 2 to 5%. And that's a royalty payment of your monthly net cash receipts. Okay. So in this example, let's say we came out at 200K, a royalty between 2 to 5%. The repayment is going to be, there's a cap, and it's going to be 1.3x the principal. Okay. So all in on a $200,000 loan with a revenue-based financing product, you're looking at repaying $260,000. Okay. And again, it's designed to optimize your cash flow. So if you have slower month with revenue, you're going to pay a lower amount. That's why you see the scale in this example between 2 to 5% as a royalty. Okay. And again, it's to help you free up that cash flow so that you can use more of your money to ideate, to scale, to hire net new employees, to do tech build out, to increase your marketing spend, whatever those growth strategies are germane to or tied to. We want to make sure you have the capital to be able to pull the trigger and to execute. It's all about execution. So this is an example of what a potential revenue-based financing facility could look like. Okay. Now, from qualifications to growth, how we partner with founders. This is very important. Okay. So what do we look for? So when I engage with a founder and I do a discovery call and learn more about their business, their models, their friction points, growth strategies, etc. Once we get to the point where we feel as though there's fit and alignment, then I'm going to ask for some financials so I can do an assessment. So what I'm looking for 24 months of historical financial data. Okay. Because I need to do an analysis and assess exactly what are your trends in your revenue. I need to be able to see, there's various metrics that we look at, and I'm not going to bore you with that on this webinar. But we're looking to basically identify, is there a pathway forward to a funding opportunity? Okay. So if you've been in business for 2 years, your revenue is between $500K to $10 million. You have clean, consistent financials. You have a clear, defensible growth narrative of concentration where I can see, okay, have a situation where one of your clients is paying, is responsible for 60-70% of your revenue, right? So again, we understand there's a clear line of sight and the visibility around your customer concentration, and we do the analysis for that on the front end. What does the journey look like? Okay, what does this funding cycle, this funding journey look like? So there's an initial intro conversation. We do a review of financials. I am looking for the last 24 months of your P&L, your balance sheet, your statement of cash flow, your revenue by customer, and a debt schedule. Okay. I'm looking at that, and I need to see that broken down monthly because again, I'm looking for trends in your revenue. Okay. Once we have we do an assessment, we say there's a pathway forward. I bring my investment committee into the conversation, and then if we get approval, then we'll offer some indicative terms. Okay, we'll put a term sheet out to the founder. If the founder is amenable to the terms, he or she will execute and acknowledge the term sheet, which will start our due diligence process. That takes about 2 to 3 weeks post assigned term sheet. So from all in, ladies and gentlemen, from start of conversation to funds deployment, we've been able to do this within a 30 to 45-day window. And again, this is really contingent upon how quickly, how engaged, how motivated the founder is in making sure that they're hyper responsive to anything that we'll need from an underwriting perspective. Okay. Now let's talk about what does success look like, right? Capital deployed, it drives measurable growth. Okay, there's no dilution, there's no loss of control. Okay, our capital is designed to help you improve your cash flow and scale and help you scale. All right, and we have access to follow-on capital. As I shared with you in a previous slide, we can potentially take all of our clients up to $2 million in growth capital. Okay, we do that in tranches. All right, there are some caps on our initial tranche, but we do have the ability to partner with you to take you up to $2 million in growth capital. Okay. So we want you to see us, not transactionally as just, a one-time capital, deployer. This is a long-term capital partner relationship. Okay. A shared success model. As you grow, we want to be right there by your side, growing with you. And again, you need capital to grow and scale. Okay. We want to make sure that we remove those barriers so that we can be with you for the long term and help you, hit those demonstrable milestones to get you to that mid-market success story. Okay. All right. There's something going on right now that I'm sure all of you are aware of. And if you're not, you're going to leave this conversation more informed. I want to talk a little bit about the new SBA rules, okay, around, what's really going on with MCA as well as citizenship, okay. As of right now, ladies and gentlemen, new SBA restrictions, the SBA will not refinance any MCA or factoring debt, okay. So that's a reality. So we are a solution to that. I would say the overwhelming majority of the clients that I engage with are coming to me with some form of MCA debt. Okay. That again, when it comes to the SBA, they are no longer allowing MCA debt to be refinanced. Okay. As well as factoring debt. All right. There's some restrictions in regards to citizenship. Okay. You have to be 100% US, 100% US citizen in order to be eligible, okay, for any SBA-backed lending. All right. Green card holders are no longer eligible for SBA funding. Prior to this call, literally before I got on this webinar, I was on a call with a broker. He has a client that fits is in this box. He has a green card holder. He is a green card holder, but he is no longer eligible for SBA-backed funding. So now the broker is referring that opportunity over to us. Hopefully, once I do my assessment and my analysis, I can identify a pathway forward. So now I'm taking care of the broker's taking care of his client. We just created a win-win-win. Okay. So what I'm sharing with you is relevant to the eligibility gap, right? MCA borrowers, you now have that limited refinance option. Okay. Again, Many founders will be excluded from SBA entirely, unfortunately, right? Because of these new changes. So our solution is that we want to make sure that we eliminate the extractive MCA debt and restore your cash flow. Green card holders are eligible for our capital. And again, our capital is non-dilutive, okay? You're not giving up any equity, ownership, or control, okay? So if you're not familiar with that, hopefully, you now have some additional information to be empowered with. So if you're dealing with any of these situations where you want to get rid of some of that extractive MCA debt, please follow up with me. I'm going to follow up with everyone that's on this webinar. But we want to be that solution provider for you in regards to helping you get rid of that MCA debt. All right. If there's some citizenship issues, please allow us to have allow me to have a conversation with you. Allow Founders First to see whether or not we can be a solution in this area for you in regards to citizenship. Okay, so with that being said, I sincerely hope he's on this call right now. When I was telling you in the beginning that I have a huge success story, that's exactly what I mean. Okay. I want to share Mr. Gene Wadi. He is the founder and CEO of Alpha Business Solutions. I did a cold outbound email to Mr. Wadi, and he assumed that we were MCA lenders. So when I had the opportunity to share with him that we are not MCA lenders, he decided to engage. All right. This is a perfect example of a founder who is not going to accept anything. Okay, I tell you right now, he has helped me level up my negotiation skills. All right, I am forever indebted to Mr. Wadi for allowing me to play in this space with him. All right, Mr. Wadi, once we entered into our underwriting phase of lending, he was incredibly and hyper responsive to anything that we needed. He turned it around expeditiously. Okay, and as a result, Mr. Wadi is we're closing a 750,000 facility is closing tomorrow. Legal docs are already signed. Okay. So I just want to, it's always good to show a success story of what this journey looks like. Okay. There was no existing relationship between me and Mr. Wadi. It was cultivated through this process. Right. And it's really about, when there's so many capital providers out here, and it really comes down to trust and it comes down to credibility. Okay. Are you going to work hard for your clients? Okay. Or are you going to be, one of those, apathetic, lenders where you feel as though, you're doing them a favor? No. Every client that I work with, white glove services, and I go above and beyond. Okay. And this is a perfect example. I'm incredibly happy for Mr. Wiley. I'll just say that. Not because he's my loan client, but just what he's going to do with his business. He's already doing $50 million a year. He's line of sight to $100 million, and Mr. Wadi will achieve those milestones. So I just wanted to share a success story with you. Again, there was an opportunity. What we did is we cultivated the relationship, and we made sure that we designed a facility that Mr. Wadi was amenable to, because he knew that the capital was designed to help him grow and scale to his next milestone. All right. So with that being said, ladies and gentlemen, I'm going to leave my information right here. I am again LeJean Thompson, recently elevated to a senior role, senior regional development manager. I have the entire East Coast. You have my email address as well as my phone number. Please, 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 if you have any questions right now, this is the perfect opportunity. If there was something that was not covered, if it was something you want me to do a deeper dive into, please take this opportunity to raise your hand. And again, this is about relationship. Okay. This is not transactional. Okay. So with that being said, at this point, I will say thank you for taking the time out of your busy day to be with us for this 30-minute conversation. Now is the time for any questions. I will defer and pass it back to Meg and Aaliyah.
Thank you so much for presenting. We really appreciate the information. I do not see any questions in the Q&A and chat, but let's give it a couple minutes.
Absolutely. Absolutely. And more importantly than anyone raising their hand right now, just want to share with you. I will follow up with each and every one, and I encourage you take a 15-minute meeting with me just to have a conversation. Let's just converse. Let me learn more about your business. Again, I can do a deeper dive into our products, how we do what we do, et cetera. And then if you're actively seeking, let me see how I can help you. Ah, my guy is here. Yes. All right. I see some questions. Let's see. Let's see. All right. There's a question about MCAs. Okay. Do you require buying out MCAs or letting them play out? Okay. No, unfortunately, we're not going to subordinate to MCA debt. Okay. We are not going to subordinate to MCA debt. So we will take that debt. We can size the opportunity big enough where you have the capacity to repay the facility from a debt service ratio perspective. We'll take that debt completely off your table because it's strangling you. Right? You cannot successfully grow and scale a business with MCA debt. Um, you know, so yeah, we would absolutely consolidate that debt, Patricia. But that is a great question. Absolutely.
Thank you, Patricia. Are there any other questions?
I'm looking at the chat. I don't see. And again, that's not to put anybody on the spot. So, again, my goal is to do what I do best, which is cultivating relationships in this space. And I will absolutely follow up with each and every one of you. And if I can help you, and listen, helping you does not necessarily mean funding through us, right? We have several programs that I can share with you that weren't even covered in this presentation. And we do a funder matchmaking process where if it's not the best fit for us, then we would definitely introduce you to one of our strategic lending partners, and hopefully they can meet you where you're at, right? So it's not a win for us. It's just not about saying, hey, we closed another opportunity. It's really about did we play an instrumental role in helping connect you to the capital resources that you need. So that's what success looks like for us as well.
Great, thanks again. And I'll be sending out a recording of this presentation, and feel free to follow up with any questions.
Sounds great, Meg. I still have my voice.
Oh, I hope you feel better.
Absolutely. It's my pleasure. Always a pleasure. And I would literally drop anything that I'm doing to support what you ladies and what Brian and everybody's doing over there. And we have the Philadelphia Capital Activation event coming up in the fall. And we'll follow up. Meg, Aaliyah will definitely follow up. So you guys can be at the table with us, partnering with us on that event as well. And would love for you to get that information out to your members so they can be in the room where those capital conversations are taking place.
Sounds good. Thanks again.
All right. Enjoy the rest of your day, everyone.
Bye.